Hey everyone, it's Mark Yegge. Welcome back to another weekly stock market update. Things are good, pretty good, almost too good. I don't know. Things are good. Let's just leave it at that. Let's see here. Where is this slideshow? Let's go here. All right. You can see we're in a green market, and we have made a perfect lightning bolt pattern, which is called an ABCD pattern. We're right at that level where it could either break through it and go up another 27 percent from here from its little last run, or it could turn around and go the other way. Usually these turn around and go the other way, but this is a fairly strong market. 4 green lights. Let's take a look. Here's the NASDAQ, pretty strong. It's right at its swing point from July 14,446. It hit that a couple days ago, came back down yesterday on strong volume, and now it's trying to hold that 8-day moving average. S&P 500 looks like the exact same chart, up above the 8-day. And we got a Dow that's breaking out, 35,679, and Dow just hit 36,000. Pretty amazing, huh? After all that we've been through. But this is inflation, guys. So don't think this is the market just going up. Like, there's inflation. So this might be an all-time high, but things are more pricey than they were the last time it was at these levels a couple years ago. So if things are 20% more, this really should be at, another, I don't know, 7,000 higher, really. So don't get that excited, but still. Anyway, I have to always give the other side of it. So we got 36,000. It's trying to break that level, just like the last one was trying to break its level. But it did break through the 35,679, and now it's at the 36,000. There's a couple gaps on this chart that I'm concerned about, but I don't think there's a momentum yet to go back and fill those. I think we have a strong market. I think the Fed's done raising. I think the Fed's signaling they're done raising. I think the Fed is stuck that they have to go out and print money anyway to pay just the $1 trillion in interest they just added to the debt. Things are not good for the Fed, and when they start printing money, assets go up, and that means assets like stocks, assets like real estate, assets like Bitcoin and gold, assets go up. So if you're holding assets, that's why they say the rich get richer, right? Because the rich hold assets. If you're just trying to get by and pay your bills, you don't have assets. So you get sucked into the inflation, and inflation is bad on your pocketbook. Like, you don't get to raise. The last person that gets any money is the person that's working, waiting for the raise. All of a sudden, the raise comes way too late. He's already had to spend all that money to pay for all the inflation up goods and services. All right. The New York Composite Index has been a laggard, but it is now strengthening as well. It's not as strong as the other three that I just showed you, but it's been trying to catch up. It's like the caboose, and I think it's catching up. So we get all four of them moving in the same direction. This market goes higher. I just think the momentum is starting to shift a little bit. So just be a little bit careful out there, even though we're pretty green. I think we've had a big run up, and it's time to, there's some people going to take profits. The volatility index is on the other side of that. So it's back down to the 1268. It tested that. It's at that level exactly right now, testing it. So, this is a reversion to the mean indicator, and it's been coming down for a while. Overall, you could see that black line trending down in the middle of the chart. So volatility has been coming out of the market. So we'll take a look at that. Healthcare is doing great. Look at that chart. Sorry, I got the hiccups. Healthcare is going up, but the banking index has been going down, and it's now doing a little bounce. Listen, if you're in banking, there's a lot of work that these banks have to do. It's got to get back up to a swing point of 115.98, and it's only at the 85 level. And so it's got to go through all of those sellers that are like, as soon as it gets back to 90, I'm going to sell it. As soon as it gets back to 102, I'm going to sell it. As soon as it gets back to 110, I'm going to sell it. And there's a bunch of gaps that it wants to fill, but there's a lot of sellers in there. So there's going to be a lot of work that the banking index has to do. And I think we're not out of the banking trouble I think next year is going to be a rough year for the banks. Not for the big four, but I think it's going to be tough on the regions. So we'll see. Right now it's bouncing, and you have to look at what it's doing right now. The NASDAQ Computer Index is also bouncing. That's why the NASDAQ is bouncing. And the top sector, I thought this was interesting, and I'll leave you on this. The top sector in the market right now is energy coal. Coal, can you believe it? Everybody's talking about climate change, although I don't know, people are starting to not believe it. So that's why coal has gone from the 190th sector out of 197 to first in 6 months. Gone from 190th to first in 6 months. Coal is coming back, everybody, and it's coming back in a big way. You know what's not on this chart? Uranium. Uranium is also coming back because nuclear is going to come back too. I really believe that. But look at what energy and coal has done this year, up almost 50% for the year. And dairy products, food is 160. Gosh, it would have been nice if we could have predicted that at the beginning of the year. You know what the worst sector is in the market? The worst sector. What do you think? Think about it for a second. If coal is the best sector, what do you think is the worst sector? Solar. Unbelievable, right? With all this push for solar and we got to go green and all this stuff, maybe people are starting to realize that this climate change thing isn't all it's cracked up to be, or all it's been sold to us. And the market usually knows in advance of when everybody else knows. So it's trying to tell us something, trying to tell us that coal and oil and the traditional things that ran the economies, that's where the densest energy is created, is with coal and oil. Like you can't smelt steel with solar power. You can't melt stainless steel and create things in industrial form with wind power. It just doesn't have enough density, right? So you have to use high density energy sources like petroleum and like coal and like, nuclear does provide some of that. High density stuff with firepower is what you have to think about. All right. Enough on my diatribe about solar energy and about the climate. I hope you're having a great week. It's the 1st of December, and I'm wishing you the very best for the rest of December coming into the holidays. I hope you are surrounded by people that you love and that you like hanging out with. Have a great weekend. I'll see you on the next weekly stock market update. Take care, everybody. Bye.